we just go kind of in the examples of the volume profile and kind of talk about a little bit about the structures of the market, as well as talking about the volume. So that way most people can kind of understand it. We can add the fibs, and I think some members, we can also record the orbs. So it can be a class of various strategies that you can use. And if something that you pick up or something that you combine, that's great. But I think it'll be informative of what we have to offer. And then it's up to you to decide if you want to go one way or the other. Okay. So we'll start off with ES. As you guys know, this is still live, right? We haven't really shut down the futures. It's just the market's closed. Futures are still ongoing. So if you're trading, just be cautious. This is going to be a low liquidity, low volume day. For the past couple of days, as you guys know, we've been pretty much running, right? So we had a huge balance here. If you guys look at the market structure here, so this is where we started accumulating, and this was the POC. Usually when you have a range or rotation, whatever you want to call it, it's the best that you draw this POC from the beginning of the range, wherever you feel like that we entered, right? So maybe it's the level that we entered here all the way to here. Just grab this range so you have that cumulative POC, so that way you can see what is really happening, right? And then in between, you can definitely use the ability, if you're, I asked you guys to kind of look into these volume profiles and what they mean, right? So there's, a couple of, we have the B, the P's, right? The D's, the uppercase B, and usually they mean something, and especially when you compare the close, where we close relative to what type of shape we have, right? So in this case right here, if you guys look at, for instance, this P shape here, what does it do here? Can anyone point out some of the things, like where we closed, where's the POC, how many distributions we have? Distributions meaning HVNs. Like here you had a mini one, right? Can anyone take a stab and maybe just kind of identifying what this one, why did it dump? Of course we went down, but why did we do that?
Well, if you look at the prior day, you had a POC that you were building up, so you essentially had a zone of buying. Then they created an imbalance. They drove it up all day long to the top range, at which point they started selling off. The close of the day was below the POC, which was showing essentially a negative trend, like getting a start of a reversal, even though P is normally an upward trending day.
That's correct. But then, I think you nailed all the points. But the bigger picture, right? So this is a micro. This is one day inside of this range. So what I like to keep in my head when I'm trading is, well, what is the overall trend? The overall trend is we're stuck in a range. So if you're able to, let's say, go long here where you accumulated on this explosion, and you're not really sure what's going to happen because you're in a range, smart money is going to do what at the top? They're going to sell. They're going to try to lock in these profits. I mean, this is 100 points. So the points that Mr. Bean mentioned is, one of them is that you close below the POC, and you're very close to closing here below the value area low, which would signify that the buyers that they brought up to the value here, they're not really finding the value of it. So if you just kind of look at it from this point onwards, just the 2 days, you go here and look what happens. So we tried to go here and build up the value. There was some profit taking here, obviously. And if you combine now the volume, this is a typical example of what on the top right now. Just look at the volume.
Upping volume.
Upping volume, but it's also your seller's climax,
Exhaustion.
right? So
Yeah.
it's an exhaustion that's happening. So if you just look here, you have that on smaller time frame, 30 minutes, you have a bearish volume as you're going up. So this is a short squeeze trigger, right? So you had a D shape here. The only reason why we ran from here, does anyone know why we ran from here to here? There's a rule in the PowerPoint. It's highlighted on the bottom left.
80%.
Ah, there you go. So whenever you have a B shape, I should start calling it L shape just to make my life easier. Whenever you have an L shape profile like this, and you're closing above the POC here, so that's something to note down. Even though your volume was down, the best lowercase L shape, or uppercase, whatever, it doesn't really make a difference, is that you want to close below the POC on those, right? You want the POC to be here, and you want the price action to kind of close below it, because then it would signify that there's probably more downturn to go. Here you closed not significantly above it, but you did not break the range here at all. You stayed here, and then you basically, who got trapped here? The shorts got trapped. So if you have a lowercase, or if you have a L shape and you're closing above POC here, this one is not the best example. You want to close to be a little bit significantly higher than this one. That signifies how, well, there's a high chance that we're going to squeeze out of here and run. And when you have, in a downtrend, remember, overall we have range. So here's like I would say maybe a D-shaped regular, well, maybe a lowercase L as well, lowercase L, and we close below it. And look, we continue down, right? So if you look at this POC right here, if you draw it, and if I'm talking too much, you got questions, just stop me. So if you look right here, right, this is a L shape. Where do we close? Not extend this so you guys can. Where did this price action close relative to the POC?
Below.
Okay.
Below it.
Okay, so this P shape here, oh, I'm sorry, L shape here compared to let's say, well, both of them are identical here. This one here also, you have to note that this one has 3 distributions. Do you guys understand what that means?
Yeah.
So you have a distribution happening here. You have a distribution also on the top happening right here. And then you have one that occurred, which happened to be accumulation on the bottom. In this case here, you had 2. You had one on the top, and if on the top, on this one, they're telling you, hey, we accumulated here, but we couldn't find value, and we pushed the prices lower, searching discovery price, to find the next value. Then they found it here, where they accumulated more volume than here, and they couldn't agree on closing above the POC. This is immediately telling you lower. We're going to go lower here between this one and the next day. So this here should tell you there's a high chance that you're going to come up, you're going to reject, and you're going to continue lower. I'm just talking shapes and volume profiles to add to your ammo of thinking how to think about it. Does this make sense?
Yeah.
Okay. Then the next day you come here. If you look here, what's different between this one and this one?
You sold off, you tried to find value, but you couldn't find value at that next lower node, and it continued to fall down.
Okay. So logically speaking, you tried to find value at the previous day POC, and that wasn't good enough. So you had one distribution here. Then you figured maybe you'll find another one here where you bounced from relatively close to it before, and then you went lower. And then if you look again, you really accumulated some volume here, and you exploded from this area, right? I mean, you created a major imbalance here. And was it easy to spot this? Probably not, just because if this POC, was lower and we closed a little bit higher, well then, if you have a L shape, and in this case it would be downtrend because you're making lower highs and lower lows in this micro view, then it would be like, okay, well that makes sense, but we are closing above the POC. That should be like a signal warning sign. Hey, we have a L shape and we're closing above on a POC. That signifies potential reversal. So in your head, whenever you see that, it should be like, okay, something is wrong.
It looks
Now,
to me, Shorty, like you've got a very short amount of time that formed that POC also.
oh, here, yeah. So you see that they picked up on volume heavily. Look at this. I mean, I know this is 330, but you see them picking up, and how big is the body of the candle? I mean, for the last 30 minutes, the body is not very big, right? And here you have a reversal candle. This is your reversal candle right here at 4 o'clock. Because this candle in the downtrend is different than the candle in the uptrend, right? Most people understand that from the candle's perspective, right? If you have a top wick on the bottom after, you know, a major sell-off like that, that's different than this candle right here. So here you're trying to bounce and you see a pin bar. Well, that's a pretty good candle to go down. And same here again, they trapped some people here on this candle. So now you go into the next day where it's a P shape, right? Well, usually when you have when you have the, you know, L shape followed by a P shape immediately, 99% of the time, I would say 90% of the time, that's a short rally covering. So that means the shorts were trapped on this one right here. So when you have an L shape and you're closing above the POC, you tested below the POC. This is where they trap the shorts. This is a typical scenario of a shorts trap. Okay. Now here, if they were able to, and they did a pretty good job kind of hiding on this one. So here, if you guys take a look, we came in and we closed right in the area where you want to close in a P shape. Ideally, it would be the best if we close above the POC. What's noticeable here is that you had a lot of wicks and a lot of volume confirming that there was an exhaustion and profit taking here. Okay. So then if you look at this range, the next day you dip below it and you come back for a retest. So usually when you have a P shape like this, where do we go long?
At the HVN below.
You want to look for the HVN, which would be this case right here. But then, you know, someone might ask, well, we went right through it, right? Why would they want this? Why would they want you? Why would they, if they know people use this style for trading, why would they do this? Anyone?
To stop them out.
This is a perfect setup for a stop out. Somebody, I'm echoing, guys. I don't know who's.
You're not echoing.
Well, I hear everything twice.
You hear yourself. Just talk. I'll take care of it, Shorty.
I hear you twice as well.
No, then you have an echo on your computer. It's not on our end because I don't hear an echo of you.
All right. Hey guys, let me see if this fixes it. It was bothering me. Can you guys hear me?
Yes, sir.
Yeah, fine.
All right, perfect. So now we know, hey, they tried to stop you out here, but they're giving you, you know, if you zoom in here on Friday, December 30th, they're giving you clues why they're doing this. So when they went below the POC, current session POC, but most importantly, the previous day HVN, they able to push and close above it. And then what happens the next day? They run it up almost to the POC area here. Look at that perfectly. And then they respect the bounce, but it's also tell you something else. This was our support, right? This is where we expected a bounce. They dipped it below. And where did they come back then? They really validated this area, guys, for you. They're telling you, hey, we dipped below it, we lost it, but we're coming back based on this. We want to go higher. And then here, who can summarize this shape here?
That'd be a capital D with double distribution, right?
This is like a double distribution. This one is, you know, you play the range in between till no longer works. This one is easy to play, but you have to be aware of the levels really, really well. Like your levels have to be spot on in order for you to do, the trading and be profitable. Okay. So then, whenever you see us running, let's say if we go back to some of the profiles that we had, whenever you see a shape like this, what shape is this right here?
D shape.
So if you see a D shape and we're closing above value area high of the D shape, that's not, in the volume profile world, that's not normal. And why is it not normal?
Because it's not balanced. It's showing that you've been trading in a range of the balanced range, and you've basically broken outside of the value high, which means you're searching for you're searching for a different price.
Exactly. That's right on. If you're in balance and if you're in equilibrium, right, of trading, if you guys think about the one standard deviation, that means there's buyers happy in the 68% of the volume that occurred here. They're super happy and they're trading, but then towards the end of the day, right, they start breaking out at 2 o'clock. They start breaking out of this, and the volume is not really shifting to this level. And then of course after hours they do some magic, like right here they have a rotation, mini rotation in 30 minutes, and that's where they exploded from. And then kind of like an open drive here, they popped, it came back, and then they continued. And then similar followed the next day. You guys see it? Similar concept. They followed the next day. They almost had a perfect D shape here, leaning more towards L shape, but they closed above the POC. They closed above the value area. That means they're seeking higher prices. And then what did they do? Well, they came back and tested this level perfectly. And if you see this, if they're willing to close and accept the value area high, what should this tell you? Bean, what did we say on when we were live on this level? This day, actually.
That was like your make or break level. That was the major support.
This was the major level, and I said this is your go-ahead level. They're able to accept the prices. If they bring it back, these buyers are willing to take it because they know there was some acceptance in this area. And you see them starting off here, pre-market. They're keeping it in the value, and I think this is wasn't this the CPI or Fed or somebody?
CPI.
Yeah, and you see, the play they did, right? So they really did not set the value here higher, but they also, they brought it back into the range, into the value, and they closed right there. And then they did it again. They brought it back, and we said the same thing. Until you break this level, this is a go long level. And they bounced it again over here. And now simply here, I know the volume today is, anemic, but they're running this and they bounced it where from? So you had I would say this is a most likely a D-shaped volume profile again. They trapped the shorts right here. They reclaimed it and they closed above it. So what do you expect?
Long.
I would expect to go long off of this PDPOC because they lost it. They reclaimed. That's telling you strength, and it's telling you that the buyers are more aggressive here as they reclaimed, and they closed very high. They almost closed above the value area high, but on the top range of the volume profile. So most likely, if they fail here now, if they can't make this 430 level, if they can't go over this, there's a high chance that we might be setting up for some traps. Ideally, what shape do we want this to become? If you're short,
Lower B.
A P.
you want a P, but where do you want to close?
Just below the POC.
We want to close below the P on a P shape. We want to close below it. And if we see a D shape in an uptrend, what does that mean? Let's see.
Long.
Say it again.
Go along at the bottom if it's a D shape. D, capital D or small d, sorry.
Small D in an uptrend.
Potential reversal.
Potential reversal.
Yep.
So that's something to kind of be aware of it, right? So if you get one of these in an uptrend, that's a sign that you should be watching for a reversal, because that would mean they did not respect the price on the top. So if this shifts and becomes a lowercase b and we close below it, that's going to tell us that they don't like the prices above and the value is too much. There's no buyers found to hold the value.
Shorty, shouldn't we have seen like more of P shape as P as in parrot of in all of this uptrend, whereas we're seeing all
P as
D
in pat or
pat? Yes.
yeah, well, you have a few, right? So you have one here, then you have consolidation, then you break here. You have another one here. You don't have one here. I agree. Yeah, if you're in a true uptrend, and I don't know if I can go back, usually you want to see more here. So here's a good example, right? So you have, I would say, maybe a B shape or L shape here. But most importantly, you're kind of closing right at the POC and close, keeping the kind of indecision. Once you pop over this, you want to go retest long any chance you got, because this is where they trapped what?
Shots.
They trapped the shorts here. So as you reclaim this level, this is your go ahead level. And then you have the P, compressed P, I would say, and you're closing above it. So any dip to a compressed P like this, you want to go long. This is your go long level. You popped above it and then you want to go long. As soon as you're over this level, you go long. And you can see that this level played a major role even now, because this was the start of the buyers getting aggressive. Right here. And you see them, they lost that, right? They lost it. And here's that level that kind of, so the same concept. What do we say now about the L shape? This is what we want to see right now. For the same reasons that you guys identified.
Now on
Yep.
that day though, it was an L shape, but we closed above the POC.
Yeah.
So would we still think it was turning because it was a long wick?
Well, it's a long wick that's telling you right here. We went above this value area, right? And look how quickly it was a strong high, and
Yep.
they rejected it. And then there's a lot of volume confirmations telling you something's wrong here. So if you look here, they pick up the volume and then the selling. I mean, they're offloading here. So the smart money is taking this opportunity to get out as much as possible at this level. And then, of course, you're not able to hold the value. You come inside the value, and you close barely above the POC.
Yeah.
Right. So any opportunity you have here, if you look at the POC, if you lose this, guys, somebody's talking.
They're muted, don't worry.
So if you look at this now, we lost this area here. We could not hold it. There was no value for them. Then they danced here. We lost it again. And then what do we do on a retest of something like this? This is short, and this is confirming here. You have a L shape, and you're closing right below it. Anytime you break it, come for a retest. This is, again, a short.
So that
Here-
next day, because it fought and it couldn't really break it above the value high of the prior day, it was
Yep.
bouncing above the POC, holding as long as it could, and then finally broke down. That was really our signal to say we're going
Exactly.
short.
Exactly.
Okay.
Right on. And then as you see this, we're coming down, and you see, what do you notice about the range as you're coming down? You know, you pay attention to your value area. So this is the value area of the prior day. It's right here. And then look at the value area compared to prior day, lower high, lower low. What about this one? You see how they're overlapping in this case? The value areas are finding potential buyers here. The value area is overlapping. There's no overlap between this one and this one, is there? Is there overlap between this one and this one?
Now, there's a strong sells then.
Yeah, these are strong sells. There's no buyers found in here to protect this. Now, as soon as you start overlapping these little value areas, there's potential that you're going to be accumulating here. And that's what rotation accumulation is. If you guys look at candle types, whenever you don't have candles overlapping, that's a trend day. If you have candles overlapping like this, that's going to be accumulation or rotation up or down. What about this one? Who can explain this one besides being from here to here? What was important to tell you that there's potential for more downside?
Price closing below POC.
Yeah, price closed significantly below POC, right? I mean, the close right here, POC is that's 20 points below POC. So when you came back to retest it, that's a pretty good sign to short it. And then here, if you guys look, why is this one telling you potentially reversal? Or is it?
E-shape, parrot.
Yeah, it's a P shape in a downtrend. You had a downtrend and you're getting a P shape now, which means you trapped the shorts and you brought the price to the POC. You closed above it, very close, not highly above it, but above the POC. So anytime you're going to come back to here or give a retest, this is going to be your go long level. And that worked. And if you guys think about, maybe now you can tie the 80% as we are going through this, but look at this. What is this for this day here, this black one? Or purple now. What is this for this day?
Value area high.
Yeah. So value area high. As you're coming in the morning, here's the 7, 8. Here's your 9:30. You're coming here, you created value, and then you created a balance, and you popped higher right to that previous sell-off POC, and then you sold off again. Is this making sense to a lot of you guys? Does it help clarify volume?
Can you explain 22nd? After 20th,
Yes, sir.
there was P shape, and then this lowercase b again on 22nd.
This one right here,
Mhm.
or this one? Yeah. Yep. So here you have a P. They closed above it, and here, as soon as if you lose this POC here, you're looking for the zone for a bounce, right? So here they were not accepting any value higher relative to where we were before, where we sold off. This was what? This was a supply where the seller was waiting. So if we closed above this level and held it, that was pretty bullish. That means, the supply is weakened and they tested it, right? They saw the supply is heavy here. So they're like, man, we're not going to try push it and buy more. And that's how the smart money thinks, right? Did we weaken the supply? Can we go over it and hold it and then continue and search higher? And here they felt like the supply was not there. You look at the P shape. If you compare this one to this, you came here, you tried to close it, you dipped below it. Then the next relevant thing for us to do is to look for this and look at this candle as you approach this. Major sell-off, then you have a lowercase, well, I would say L. And here you dipped below it, you trapped the shorts, and then you closed above it, which is telling you, hey, be careful. There's a chance for a spike up. And you closed above it, you came back, this was your entry. If you're playing the retest, you went long here and you collected about 40 points. Probably would have gotten out on a PDPOC, but does that make sense?
Thank you.
And then this one here is simple again. It's a compressed P. You closed above it, and it's probably signifying there's a high chance you're going to go higher. They did. Let me see if I go regular hours. It will help you guys. Okay, so here's this one, just regular hours, just so we eliminate the noise that they do here. Does it change the story anywhere?
It was 22nd.
I was just thinking, does it change story anywhere here that you guys are seeing? So here's your 22nd.
From lower B, now it is capital B.
From here to here?
No, as in 22nd only.
So from the 22nd, so the sell-off occurred mainly during the hours, offline hours. So this is more like a, I would say, L shape. So that was the
You're looking at October.
I went too far. Here. So it didn't really change much. Usually the you know, after hours, they add a little bit of volume, like these shelves, like you're seeing here. But they will not add a significant shelf unless somebody's really liquid after hours to take a trade. Just if you guys watch it now, you will not see a lot of liquidity in the market. Okay. So now if you look at the latest trend up and kind of digest this, right? So we've tested this area before and they brought it back down. You know, they had like a little pushback. They pushed it back down and now we're back in that range where we got rejected last time. But if you look at it on a daily, let me just show you daily. Is there any, what can you guys tell between candles and volume now?
Except CPI day, it's decreasing volume on this trend up.
Okay. What about the last 3 candles? Be careful how you answer this.
More buyers are coming in because of the weak
Okay. There's
downside
no
week.
more buyers, just aggressive buyers, right? Same amount of buyers, just more aggressive. And that would be correct so far. Because remember, the body and the spread of the body versus volume. Here, you know, your volume is less, but so is your body. And what they're doing here, does anyone know? If you read in the cooling book? Anyone know what's being done right now based on volume?
When it sell off.
Selling
It's
climax.
it's
I don't see selling yet. There's no
Oh,
stopping
buying.
volume.
yeah, yes, there is no lower wicks, not upper.
They are doing the short covering.
No, they're not. Look at the body. Is this close higher than the previous one here?
Yeah,
Is
Yes.
every one of these close higher than
Higher
the previous?
highs. Yeah.
Higher highs, higher lows. Is this a higher high than this one? So far,
I
they made
think
a higher
so.
high.
Yes.
Well, they also made a higher low, and the body of the candle, if they have the ability to push this up now, what the big money is doing right now, whenever you see something like this on the top, is they're testing to see if the supply is still there. If they see heavy supply, what do you guys think they're gonna do? They're gonna sell everything they got and then try
Dump
to
it.
see, dump it, and they're gonna try to see if they can get it back. If you use volume right here, they're gonna see if, well, we can get it back at 38.55. Let's sell this round here. And what that does to this guy is what? It will weaken his supply. So then the next time they come in, they're gonna do the same thing. Man, is there a lot of supply here? If there's not, well, then they're like, okay, well, what we can do is, and here comes the retail. We can give them a triple top pattern. Let's say I'm just throwing it out, the levels. Let's say this will be the triple top level. They will accumulate more here. And then they're like, oh man, it's an ascending triangle. It's a triple top. It's an inverse head and shoulders. You name it, cup and handle, they call it. And then what do? Well, they literally just have to break it once. And what do you think the retail does?
They all in.
long.
Full port.
They go all in, they look to the left, and what do they see? They see the next supply sitting right here, and these big boys, they're letting them, they're not buying as we're going up. They already bought it, guys. They already bought it like on the bottom here. They accumulated here, and they re-added to their position here. These are the 2 levels on the bounces you're watching. It's this level and this level. So now they'll give a look here, right? They might give a little trap on the short side, but then it will have to really break. So if you look at this shape here for a couple of days, right? I mean, it's a lower B, and then we broke the value area, and that was a pretty good important level to say, hey, there's a high chance we're going to go higher here. Once 39.20 broke, this was a go ahead, you know, for us to go. Now they're just testing the supply based on the volume. They're trying to see how strong is this so they can go. And you know, there's really, when you think about anomalies, there's really not of, so this, if the bears took control of this and closed below this level, that would have been really, really bearish, and we probably would have gone lower. Here, they got exhausted. They literally, the buyers overwhelmed the sellers and they pushed the price higher. And now they're just gonna come here and see how strong is the supply. And that's the game that we are in now. If we are able to break this level, then we can turn on the VRP here. Look what happens here. You break this level, you have a nice little shelf, skinny belly.
Yep.
Probably all the way to here. So, 41.20 is a good level. And then if you zoom in a little bit more, look at that shelf. So now they're just gonna test it. Is this weak? If so, they can catch another 150 points from here. And why not, right? If they have the ability to sell it for another 150, much easier for them to convince the retailers, hey, we broke this major level, we're gonna go higher, and then retailers pump it, and that's where they offload, in my opinion. I think if there's gonna be an offloading, they do it there.
Shorty, from December 13th, 14th distribution, there is a POC coming up at around 40, 50, 40, 60 level now.
Are you talking about a VPOC or?
There's a VPOC as well at 40, 70-ish level.
Yeah, that's right here, 40.75.
And there's 2 days POC also from a distribution perspective.
Yeah. Yeah, now I'm aware of that one also on SPY. If you guys look at it, SPY is really good to look at when you're looking at these things, right? So if you're looking at volume profile for sessions, SPY is really good on this. And you can see here, you have a compressed L shape here. You closed above it, right? Well, I don't know if this candle, where does it come in? That's the next day. Once you close above it, they triggered a short squeeze here. And look at this one here. It's indicating, hey, there's a high chance we go higher here. We closed above on a P shape. You came here. They bounced literally to that level where the buyers were heavy. And what did the buyers do? It just simply defended the level. And then you have another P and a bullish gap, right? So here, if they come back to this level, which they will, this is a VPOC here. I would say this was a VPOC for me for now. You have one that was left there a few days back. Usually, when you have this many VPOCs, you tend to come back, and there's one of 404, I believe, here. Yeah, there's the 404 level. And this is kind of 475 CK, or if that was you. This is the same level as that one.
Yep.
So it'll be interesting once we come up to this level, what do we do? So now, if you think about SPY, what is the level that bulls have to hold? Think about volume profile now.
First VPOC, right?
Say it again.
That first VPOC you have right there.
Yeah, it's this range right here.
That one.
So this is what they have to hold. This is your bounce zone now on SPY. Because here you had a P, now you're building, I don't know. Remember, there's no volume today. If you're trading today, be super careful. This is not a day where you become a hero. If we get back inside this range here, which we're above now from the previous day, then we have a trigger, right? Potentially to here. But if they defend this level, there's a high chance they have another $10 move on SPY. So for us, this is a critical level for shorting, right? If you come back down below short, you have about $4 move to 392 to get it. But eventually all of these VPOCs will be fulfilled. Every single one. Okay. So does this help you guys identify a little bit of shapes and understanding logically what happens? The relative close to the candles, to the POC, the value areas, shift, whether it's making higher highs on value areas or are they overlapping? Those things play a big, big, big role, guys, when you look at the market structure, like using volume profiles.
For a day like today, I mean, there's not going to be a lot of volume. Is it almost meaningless what the chart does today?
Today, yeah. Today, volume profile is one of those where you just kind of have to ignore it because it could be this is a good day for them to set up a trap. right? Where they push it a little bit volume, they give you a look, and then, they do totally opposite. Because remember, we've been running for a decent amount now, right? So if you go from here, if you look at this, we've had a decent run up, yeah, 6.5% so far from the lows, which is not a bad start to the year when you're, especially if you start from December 23rd. I'm sorry, from 2023 here. I mean, SPY's up almost 6% for the year. And this is the 16th day of a year. I mean, a lot of people, if you parked your money right at the end, into SPY, considering we had that huge run up at the end of the year, you made some decent money here. So now it's trying to figure out, hey, where do we stop? Because when you think about the bigger picture, where are we in bigger picture? Are we in uptrend or downtrend?
Uptrend.
We're in
Still
uptrend.
got lower lows.
No, just definitely downtrend. Higher high, lower high, lower high, lower high. The only way we make a shift here is where?
If we make a higher high.
We need to make a higher high, so we need to go over 411. I need to hold that level right there, not close below it. So you do have higher, and a lot of people are saying, well, this tap on the trend line is different than any previous one that we've had. What do you guys think? Is this tap that's about to happen different than this one?
And the fact that it came sooner.
So it made a higher low, between here and here, right? And the difference is between this one and this one, right? So if you guys look, they had the same pattern. So I'll show you exactly how they had the same pattern. So between here and here, where do we bounce? To have the second leg up, down, reclaim 61.8 and try to push up, but we didn't, right? So now if you do the same thing here, you grab from the lower bottom to the top. Where do we bounce? Look at this. Very close to the 61.8, and it's even, this one is stronger than the previous one in terms of the strength and the momentum on this bounce here. So is there a chance they run this through? Yeah, there's a high chance they can break it. So it's 1, 2, 3, 4. This is the fifth tap here. Not that they're significant. So fifth tap, you break it like a charm. Really none of it. But the macro conditions are gonna, whether they get better or not, will be interesting.
That was interesting to see the decline in volume on the selling.
And here, same aspect. And now you get into the rotation of the volume profiles, which is bread and butter for me, guys. I pay attention to everything, but my accumulation zones are key. So we had a couple of them, right? So if you guys look, we had one here where they accumulated, and all you have to do, you don't have to think, where do I stop the candles? Where do I go? Grab this consolidation and draw the POC. That's all you have to do. You don't even have to find the top, just find this bottom one and look where the POC is. As you come back to this level, what should you do here?
Go long.
Yeah, this is your go long level. And when you think about it, most people would be scared to get in there from the retail perspective, right? They would be scared, but the people that are taking a short from here, let's say this is where we reject, it's a double effect. What would they do here? If I short ES at 4,000,
Buy it back.
I'm gonna buy back. I'm gonna participate in buying along with the other people that were buying here. So this level becomes crucially important. That's how 3960 was identified on ES. People shorted from 4,000 to 3960, and then they got out because they saw a lot of buyers before, so they jumped in with them. And same thing here. And then if you guys look right here, this was kind of like a broadening formation here, but this is, again, it's a consolidation. So if you look at this, there's overlapping candles, right? Besides this one here and a big volume. This one is telling you, hey, we really want to go higher, and then they sold off again. a lot of volume came in on this day here, December 13th. They sold off, and this could be mainly due to the, if you think about the taxes and accounting, right? This could be their tax write-offs. Or it could have been a nice bonus, right? We bought it at the low here, 393, and we sold a lot of it at 409. Remember, Wall Street bankers also like to get paid. So that could be the trick they played here. And now let's see what they do, right? So if you look at a daily, kind of has a bullish engulfing on the top here. And if you draw this zone from here to here, the POC is on the bottom and we're well above it. So bias aside, the only thing that you have left to break is here. Then you have a chance to really take off. And I would say it's most likely going to be, 404 for SPY. And then if they break that, it's the 411 POC that they have. So here, if you guys look from this sell-off, there's really not a major supply, but until you get to here, you have this level here, you have this level. So this was a really good supply before. And this is right at 412. So this was a congested supply. This is where they start off from, and that's where they trapped. So if you guys look here, we came here, they trapped the shorts again here, and look, what did we do shortly after? What is the favorite setup for shorting if you're gonna short POCs like this?
Test.
Yeah. So here we would have taken a stop loss, right? This is where your trade doesn't work, and you just say, yeah, I lost the trade, probabilities were against me, and you move on. But they give you a much cleaner setup, right? So you dump from here, you go here, you get in short, you fail. Where's your opportunity to short? It's
On the
not here.
retest.
This is the best opportunity to short, right? So now we're watching, kind of see what they do here. Let's say they go over 402 and they hit 404, which was somewhere around here. Then they come back. Does anyone see a shorting opportunity? This would be it. If they do that, this would be our short opportunity, and this would signify, hey, they're not able to hold higher. Same level where we sold off from. It's the same pattern from here. It will replicate here, but we're waiting here. Right now, you don't really have it's a lot of gambling if you're taking shorts, because you're just kind of feeding the fire. They really haven't had a lower high yet, right? If you think about it on daily, they've had higher highs pretty much on every single day here. If it's a higher high and a higher low, why would you short it? Anyone? Is there a reason to short an uptrend? Not really. There's no, unless you have bias to go short, and there's really no reason to short it. And if you guys think about the same pattern that occurred here, is it occurring right now? So this is our POC of the accumulation, right? This was the POC of accumulation here. This is the POC right here. Did we dance around it a little bit? Yeah, one day. And what did we do? We broke above it. We broke above it. We went higher, and then we hit the trend line. Now they might make a trap, a little bit stronger, because now you'll be breaking the trend line and they know who's watching. Retail's watching. So now if they hop over it and we lose it, we know, we're going to know here, once you enter the PD value area high, there's a good entry, or a safer entry would be where? Anyone? Where's the best entry for short? Based on this, what we covered here. Accumulation.
Or 1170.
Careful. Look at this. You accumulated here. You dumped it. They came back. You would have entered short, right? And then they set up a trap. You went above the POC. You came back under and then short. So same concept here. You accumulated right here. So you grab the POC. Where's the POC of this thing? It's right here. Okay. So you break above the POC just like you did here. You break above, man, this line's a little crooked. You break above the POC and then you came back and you short here. So what would this tell you to short where? Create the same story now.
On the
395
retest.
The safest
Retest of
short would
POC.
be, yeah, once they slice through it, this is your short level. This is the ideal short. This is your kind of B minus setup, is if you break the PD value area high and you come back and you short right here, and then you can target levels. If it breaks this POC, I would target the recent lows, which would be 350s. If it goes PD value area high, I would target probably the value area low here somewhere, which is about 10 points.
Okay, so we're looking at daily levels, not previous day levels.
I'm looking at
Would you mean like weekly?
I'm sorry.
Oh, sorry. I was gonna say like this would be closer to like weekly levels than previous day.
Well, this is accumulations on daily format.
Yeah,
right?
yeah.
On daily, so this
You
is big
corrected me
levels.
before I spit out something stupid. So
Yeah.
sorry,
So this
ignore
is big,
me.
This is big levels. And now that we know, for the past couple of since December 16th, you see that we accumulated here, right? We have a nice little accumulation. So like I mentioned, all you have to do is you grab the POC up to here. This becomes the level that you're interested on any pullbacks. 381.6, I'm sorry, 381.3 would be the level you're interested on pullbacks. And now, since you're running up, right, I like to use 30 minutes for accumulations and retests. And if you guys look here, we haven't really been giving much on major retests, right? So if I was to grab from here, let's say to the top here, we broke this level here. They gave a nice little retest, and look, this 388 worked like a charm. I mean, it acted like a trampoline here. If you grab from here to the top, it's really not clean. I don't see a lot of, like clean accumulation here, rotation. Yeah, there's overlap between the candles right here, and it's, minor. So if I go from here to here, I would expect that, come on. I would expect the volume to be here, just because of the volume after hours. If you think about the volume where it occurred and where a lot of volume picked up, and I think this is CPI data, you see a lot of volume here. And on 30 minutes, this is telling you a little bit of an exhaustion is happening here. 30 minutes confirming exhaustion here. So if you go on different time frames, higher time frames, you see here, big body candle with, look at the volume. And then you see pickup in volume here. We haven't made a higher high. Just now they broke this high here. And there's some volume in the wick on the top, and the volume picked up. So we know the bias for the daily, what's telling us. And now you look at this, and it's, there's a little bit of a confronting style here. So, and next week we have a lot of speakers. I mean, it's a lineup of speakers. So I know the PPI is coming out. There's Bostic, Bullard. I mean, look at this lineup here. So next week is going to be, pretty volatile in my opinion, right? I think the first day or two it won't be, and then it's just gonna pick up. So now I would definitely watch, if they can bring it back to this level on the bounce, that'd be great. I don't really see an accumulation and an imbalance to the upside here, so I can't really say this is good here. There was a little bit wide balance here. If you guys look, this is the levels where we rejected from before. So if you grab from here to here, this comes a level that's kind of interesting here, 419 for a potential short. Just know 404 is a big magnet on the top. Now, if you look at other indicators that we use as breadth, so for instance, this one here, I like to look at SQQ for various reasons because it does trade nicely with accumulations and it's beautiful. So if you're to look at this, I immediately see this here. I don't know if you guys spot this immediately, but to me, my eyes go here. If I look at this only, and I draw this distribution here, and then of course we have, I would do something like this without zooming in too much. And what happens here? We created an imbalance, we're coming back to it. And now we came back here and made a higher lows, right? So same level is applying, but there's a supply also on the top. If you guys look, there's a lot of overlapping candles kind of in here. So if I look at these, and this is my POC, where do we reject? And remember, this is weekly time frame. So this is a really big level, like 58 level on this is huge. Anyone else see anything interesting now on SQQ, like recent?
It looks like you've got a little consolidation below.
Right here.
Yeah.
So I was hoping somebody sees it. So there is a little bit of, accumulation here. So SQ made higher lows, right? We haven't made, relative wicks wise, we made higher highs. So this demand took out the supply. But now if you grab this guy and you go from here, we're kind of right there sitting at 45.8 for a potential bounce. If not, then there's a high chance we're gonna go here and lose that. So if we lose 41, high chance we go to 30s. And then all you have to do is, if you connect, let's say I'll start from here. If you connect this right here, this might not be a bad, bounce here. You can draw this multiple ways. There's one from here. Why is this one better than the other one?
Because this is touching the most recent connection, plus this is a triple leverage where there's a devaluation that occurs in this kind of stock.
Exactly. Yeah. So now this is a much better trend line here. If you're coming into this zone here where you accumulated, so they could bounce this from about 41.20, and this would be a good entry, to kind of go long on SQQ and put a stop loss. So you will have $3.30 as a stop loss, and you could literally aim again for 58. And along with this, you have VIX, and here's your VIX trend line. Let me see. Here's your VIX, 1, 2, 3. I mean, look at the bounces and look where we're coming up. So it's pretty much do or die for VIX, right? If you don't bounce here, the market's probably gonna melt up higher, right? And usually VIX below 20, people start doing what shares?
Fine.
Buy.
Big money does not buy when VIX is below 20.
But
They
retail
buy.
does.
Retail does. The big money started buying when VIX was 35. You buy the shares at the highs of VIX. You sell the shares when it's at the lows. Right? So that's something to watch for. News-wise, so they're compressing obviously the news because when they have a nice little uptrend like they're having now, their goal is not to hurt it. So I don't think you've seen many negative news lately. And if you guys recall, let me go back here. Same thing happened when we had this, the rundown. There was a lot of bearish news. Fed speakers sounded, confident, and then the tone changed a little bit. So now that tone is still going on, and they're keeping the same tone here, staying bullish, and all of a sudden something is going to happen, and they might flip right as we're at some key levels that they become a little bearish. So this is something to watch here. So now you have a nice, I would say, channel up here. Let's use the proper tool. So you have a nice tool here, and if this is the case, if they're going up to here, this will be the triple top. I think it was the 4,300 from this level. 4,300. So if they do decide to push it here, what did they create then? What is this then?
Larger structure.
This is a really, really large structure and a really, really large range. So they buy here, sell it at the top. And you're watching this before, because if this structure repeats itself, right? I mean, the structure is measured move. So from here to here is 20%. 1872, so somewhere around here. So you're looking at 2,800. Or to the upside, right? 18.7. You guys get the point, somewhere around here. So this is the two structures that you're playing now. Go above it, accept it. High chance we go high, you know, new all-time highs. You close below this one here with 3,500, and a strong chance you go to 2,800. Which, if I was them, I would rip it higher. And like I mentioned before, just because everybody's expecting a fall, it will not fall. They don't do it when you're ready, right? They want to make you believe that we're going to dump, and then they'll find every reason in the world to sound, you know, bearish, and they go up when you should be bullish, just like they were here. They got everybody trapped here for going long. I mean, guys, think about it. Everybody was thinking, we had people in this group said Tesla's going to go back to 1,000 when Tesla dumped. Really nice, like lost 60% of its value from the top. Okay. So just keep that in mind as you're trading. And in addition, you know, to what we covered with the volume profile and the shapes and kind of doing analysis of it, you want to be, you know, if you're not fluent with the fibs, it's fairly simple. On any structure where you have a swing high and a swing low, or a swing low to swing high, you can find the support and resistance. And I only care about 50 and 61.8 in terms of retracements. All the other ones, they lose a little bit of strength because it's not really used like that in probabilities and and in the market. And if you guys think about it, one standard deviation is what? 68%, right?
5%.
So if you want to use 68 as a ratio, you definitely can. So here, if I'm looking where potentially I can expect a rejection, I will grab this high to this low, and I'm looking for this level where it can reject. And if I look and I zoom in, I'll just remove these other ones. Let's actually enable this one. If you enable these three, this is pretty good. This is your golden zone, you know, in terms of shorting. If I was to short this is pretty good here. This is less, this is more riskier here. This is probably the best entry you can have. So I'd watch this. And then if you go on a, you know, higher time frame, right? If you're grabbing bigger levels, you could definitely grab from here to here, and then you would know, you know, where's a potential rejection, right? And what do you have lining up here perfectly? Your 61.8 is lined up right at the level where we said that's also the range top SSL high, right? So there's a high chance that they might push this. And then when I say push it, it will not look like a straight shot up, right? They need to create market. They need to create liquidity. Maybe they go 41.50. You find a pullback, because I have a high, you know, conviction that they really want to go to 4,300. They would burn so many people on the put side if they're able to do that, that it would not even be funny, right? They would be exhausted from shorting and trying to short. And, you know, I would think somewhere around here would be ideal. Okay. So same thing you can do in 15 minutes. If you guys look at ES on 15 minutes here, you can use these fibs to predict, right? If I want to find the extensions, if I want to know where the price is going to go to, then you grab opposite, right? I would use the opposite. So if I want to replicate this move from here to here, and I want to know the extensions of the move, I will grab high to low. I would look for 127 and 1618. And we are about 127. We bounced off of the 50%. So that means the ABC pattern, most likely, you know, it completes right here at 465. So I would watch this. And if I want to find the bottom targets, right, the extensions, I can grab from here to here, and this would be my extensions. And this one would be invalidated once I break 50% for the downside. And here they broke it with a huge volume, and then they proceeded to execute the bullish one. Okay, does that make sense? So if you want to find support, you grab from the bottom to the top on fibs always. Here's your support. Where do we bounce off here? This
The 0.5.
0.5 on the dot. So this is your entry here. If this is your entry, if you're going to play this, you know, in addition to the fibs, if this is our entry, where can you put your stop loss? How do you trade this?
0.618.
Yeah, you can put it below 0.618, which would be, you know, it would be nice. It'd be 20 points loss. I mean, which is pretty wide, right, in terms of points wise. But the worst case you could do is if you grab this right here to here, what can you do now? It's telling you a story where to put it.
That volume shelf right below the 0.5.
Yeah, you want to put it, I would put it right here below this volume shelf right here, and I just saved myself 10 points. Because if you slice below here, you really don't have volume till about 38.70. So in addition to the fibs, I just combined volume and fibs and found myself a support. Some people, retail and everyone actually, would put it probably below these wicks. But if you're going to break this level of this shelf right here, if you're going to be breaking this concentration of shelf here, I'm out. Like, I'm not going to take a risk on the skinny belly here where you can drive it, you know, 38.20. Okay. And same thing you can do here on the upper side, right? So if I'm replicating, so now you had a really run up like from here to here, correct? You had a really nice, you know, move. Where's this bounce coming from? How would you find this bounce here? Same thing, guys. It just repeats. The whole cycle repeats. You grab this, and where do we bounce?
.5 again.
0.5. I mean, can you even put a penny in between?
You can't say that we bounced there because that's after the point on the fib, or that's before the point on the fib that you just drew.
Oh yeah, true.
Yes,
It,
I agree.
it bounced to the right on
No,
that
I
green
totally
stick,
agree.
but just
But
wanted to be
overall-
sure that we're clear.
Yeah, but this is your structure low to structure high. So if you're going to play this, then this one here also becomes relevant. And I would say this is 0.382 or one of the two where it bounced. So the closer the bounce to the lower fibs, what it means. What does it mean?
The stronger the uptrend.
Stronger the uptrend. So if you're bouncing at 61.8, that's a really technical bounce because that's a, you know, that's a fib ratio. 50% is not a fib ratio. I call that the retail and the discount ratio, right? A lot of algos are programmed to buy a 50% discount. And of course, retail figured it out. So they treat 50 as a fib. Fib, it's not a fib. It's just basically where a lot of algos are programmed to kind of buy or sell. And you can do this again. I don't go below 5 minutes, but you can look at this again and use it the same way. You can also use fib extensions if you, I guess, if you're not familiar. Instead of using the retracements the way I do to find targets, I can replicate this move using fib extensions. If I grab the low, let me grab the low from here to here, and then I grab the next closest low, this becomes my targets then. Anything over is my first target is 430, and the next one's 441 based on 5-minute fibs. Because I'm replicating, all I'm doing with fib extension is I'm looking at this high, swing low to swing high from here to here, and I'm starting it from the next pullback. So I want to know if this is 100% of my move that I'm interested from here to here. I want to know from here to here, where's that 100? And let's see if I was to add 100 so you guys can actually visualize it. So the 100% of this move is here. This move replicated to here. Does that make sense? This move is here. Now the extension of the move, the 1272, you should be hitting this if you're in a bullish trend, as well as 4041. What I know, just because I know, if you guys look at these levels.
Say, Shorty, I just noticed you're on regular trading hours, not extended for ES.
Yeah, because I changed it earlier when we were doing volume profiles. I'm just demonstrating how to use fibs. I'm not demonstrating the accuracy or trying to trade off of it right now, right? So irrelevant what I'm showing. You can use this, whatever. I use extension, right? So if you look at this, if I grab this, does anyone remember what this level was here? Not this one. On daily. Anyone have any levels here? What this would be here? The 430. Does anyone recall from last session when we traded live? Didn't we say the 61.8 CK was the 4030? I think you had it on your chart. This is a level that's fairly important from the swing high and swing low perspective. If you guys think about it, this is the level here. So this was the, the dump from here, because this was our accumulation. We dumped it. And now from that high to this low, you're coming back to a really crucial level, that 40-30 level. So if somebody's aggressive, you want to short it here, you could definitely short it. Just know you're, shorting a little bit of an uptrend that we are in now. Okay. Do the fibs make sense to everyone? Anyone got questions about extensions and any of it?
Yeah, Shorty, I got a question about something that you just mentioned, because I'm familiar with the 0.5 to the 0.618 being like the golden zone, but you also mentioned the 0.68. I'm guessing you must have done more back testing than I have on that.
Yep. So 68.2 is a statistical level, right? 68.2 would be your value area. It's your first standard deviation.
Okay.
So if you break 68.2, for instance, and I looked at this uptrend here. So if I looked at this and we are bouncing in the 50%, that's great. A little bit stronger trend. If I go, hold on, just delete this. If I'm looking for instance, for a rejection, I would still look at it, same way. But this level here, 68.2, can be used as a true stop loss. If I'm getting in 61.8, I'm not giving, in this scale of things on the daily, I'm giving a lot of points, right? 50 points. But if I'm really short to go to the bottom here, I'm giving up 50 points, but I can use that fib. Let's say I get in, we said we would get in on 40-30 based on the fibs that we had. So let's say if this is our entry and we use this as a stop loss and this is our goal, I can use that fib because I don't want to use the next fib available. If I use 78.6 ratio, that's going to be pretty far for a stop loss. At least it is for me. That would be, 41.50. And I don't know if I would risk 120 points on ES for a trade. So if you're using fibs, this one is a really, really good, important fib. Not fib, but a ratio 68.2 to use to complement the 61.8 and trading around fibs as your stop loss. Because it is a standard deviation, right? So, and our volume profiles, the value areas based on the same. We do use the value area 68% instead of 70, what most do. 2% might not mean much, but it's more accurate.
Got it.
Yep. So that's why we use it. And then I don't know if anyone uses any fib fans. A lot of these you can use, right? So fib channels are really good. If you guys ever kind of come across from them, I only enable 0 and 1 just so I can get the channels. But in between, if you put these levels and if you put the 127, 1618, they become pretty accurate, right? So you see here, we grab this top here. And now as you come up to this level here, there's a high chance you're going to be rejecting. And I know 40.75 is a epoch as well. So it kind of gives you that confluence that you can use on the channels. I like fib channels and I've used them before. So that's it on the fibs. And the same thing I can do on the fib extension, you can do the down. I grab it from here to the bottom to this level now, and this will project my targets in case if this is a, let's say if this is our B shape, I'm sorry, ABC bearish, then you can expect these levels 28.44, which matched, if you guys recall from earlier, the measured move of the range that we're in. And you can do this on any time frame. The only thing that you have to pay attention, if you're doing it on a weekly, don't be the guy that uses a weekly time frame like this and you're trying to, trade on a daily level. These levels might not even be visible when you're trading. So you want to, if you're using for day trading, you can definitely use, 3 hours and below, 4 hours, and that's already getting into the swinging. I usually like 30 minutes if I'm going to day trade on the fibs. I mean, they will probably produce the best results. And here's your, 30 minutes. If I grab the top to the bottom, you're coming back to the 50, and that looks like a good range. Let me just remove this 78.6. This looks like a good range for a bounce, and if that misses, it's here. And you know, there's confluence of items why we bounced there, and this is one of them. So if we accumulated here and we brought it back, why do we bounce here? Perfectly off the POC. You have the 50%, and I don't know where's the VWAP. We're above it right here. So now you're kind of running higher to see, and I don't know if this is gonna hold here, but let's see. The volume is pretty bad. So does that make sense? You know, volume profiles, the types, how do you use them along with the fibs? Is that so far everyone comfortable how you can combine this?
Need to rewatch this, but it's good.
Because for us, when you're trading, we you know, the stock market's random. We don't know where it's going to go. The only thing you might do is have a probability in your setup and confluence of items to take it long or short. People that say, I know where it's going to go. Well, okay, magicians, I've never met you yet, but if you're able to do that, then you should be a billionaire. Okay. And here, I would be short if I was trading right now. And that's where we had this little distribution, right? Overlap. We came dumped, created an imbalance. There's a big order here executed. Also one here. So there's a high chance that you're going to be rejecting somewhere around this level. So this is our zone, and this is our POC. So you have a confluence item here that's telling you, hey, this is not a bad short. Okay. Last but not least, let's kind of talk about the orbs. So let me bring them up. So if you're new and you're starting, you know, to kind of get into the into trading, the orbs is really kind of system made for you, which will teach you patience. And a lot of you guys suffer from not having the ability to be patient for the setup to really come to you, right? A lot of you guys have the FOMO, you're itching and watching the screen, and you're literally just wanting to trade. You're almost like an addict that wants to take the drug, and you're doing whatever is possible to get it done and do it right there and then without knowing if there's a setup or not. So here on the script, what we have, so we have the IBH, we have the IBL, right? We know what those are and how to play. Is there anyone on the call that doesn't? What did they tell us? Does anyone not know that? Alesh, are you familiar with it now?
You explained this very well. I think we should know.
Okay. Anyone on the call that's not familiar with the IBH and what it tells us?
Can you possibly briefly go over that again?
Yeah.
Thank you.
So we have it marked on a script here, and your IBH and IBL is initial balance high, initial balance low from 9:30 to 10:30. So usually the day range will be set in here. If we get the 5-minute candles to close above IBH here, there's an 88% chance that this IBL is going to be the low of the day. Then we only have one job, and this is the easiest trade you can make every single day. You can be one and done based on this trade. If we know that this is going to break and this is going to be the low of the day with 88% chance, I'd be willing to risk for the 12% on the buys. So now if you look at this, so if you have, you know, you have the orb high, which is lower than IBH, so you're above it now. The rule on the, you know, on the orbs itself is to play the retests and go long here. And that's good, right? You can do that. In addition to that, if I just draw, what do you guys see in this range right now? What is happening here? Remember, candles overlap is good. It's good because it gives us entries, right? And what is happening here? How many candles overlapped here? A lot. There's a bunch of candles. I mean, from 9:30 all the way till 10:30, this was an accumulation zone. If I grab this now And it's still early in the day, right? I mean, what is it, 10:40? So 8 minutes ago we set this. So let's see what they do, right? So this is our initial balance high. I'll just highlight it. Change the color to black or gray. So if this is our initial balance high, we just came back here. There's most likely a chance they're gonna do what here now? They're probably gonna go peek over it, and then let's see if they can close above it. If they don't close above it and they reverse, and they go below the IBL here, which matches the orb below, then we know there's a high chance, that this was the high, and this is most likely going to be broken based on the retest, and we would look. For right now, we don't have a setup based on IBL and what's going on. Off of orb high, you have opportunity to go long here based on 5 minutes, but we really want it to go above and then come back. If you play the single candles, you can get stopped out a lot. You want them to pop this higher as they come back. This becomes your kind of opportunity to go long here off of the orb high. And you see here, they have a tiny little shelf. We haven't really grabbed much, to the left of it. But as of right now, your best entry is 40.17. If we come back here, and even if we're in the range, I mean, this would mean that the 50% is right there. If this is our range, and if I grab the highs and the lows, look at the 50%. It's right here. So this would be the best zone, even if we are in the range, if we don't break IBH or IBL. So you can use that, right? Today, I wouldn't rely on too many rules on a day where nobody's trading, right? So that doesn't matter what strategy you use. I don't care what you use. The volume and the slow volume, people can kind of send you both ways if they want to, right? If a big player comes in and just puts a sell order here, all these retailers are done. And it doesn't matter what technical you're using for charting, right? It's going to matter about your risk management. That's why risk management has to be perfect, not your profit taking. So keep that in mind. On the orbs itself, if you guys, I suggest if you're fairly new, switch to the Ashi candles. You lose the concept of price action and gaps, but you will kind of, the headache of, the momentum switches, and this will kind of go away. Because this takes out, it truly gives you a momentum, and you will not be as scared as much as you're trading. And here you have the PDH, you have the previous day open, and then we calculate the pivots. If you guys see them, they're all kind of below here right now. So when the pivots are below, that means you're in a strong uptrend, and most likely to continue unless you breach. We haven't breached even the daily pivot yet. So we need to start hitting pivots below if you want to go. Here you have a trend bar, which is pretty good. If you guys look at it, anytime you're challenging yourself to stay above the trend bar and you break below it, you see how nicely it can act for you to continue to stay in the trade. Or if you get a candle close above it, then you can get out. Like even here, you guys look at the cluster on the bottom. We came close to trend bar, break here, but we never closed above it. Then finally, where the green arrow is, we broke through it, and then basically that was signifying, hey, go long. And then here's you get out here, you close below it right here, you're done, you get out, and then you're looking for opportunities now. So you want to use the trend bar as a confluence item. So here, you're above the trend bar, and you can use the trend bar also as a bounce level, right? So here's 417 level that we have on the trend bar. And if you guys look at it, that's pretty much right in line with the POC. So in this case, you would have the 50%, you would have the trend bar and the POC. Me personally, I wouldn't see a reason not to go long because the PDC is also there, previous day close. So this will be a good level using the orbs to get in and get out, right? And when I say, get in, that doesn't mean when you're using orbs, you're aiming for 10, 20%, and that's where, the compounding comes in to be crucial. So you can use the system retest of orb high. So here they brought it here, and now they're holding the orb high here. So let's see what they do. This, it's still not the best entry, but you could go here. Just know the IBH is literally above it. So that 420 level is important to break in order to hit the next level, which I think they'll probably push it to 425. Okay, so that's orbs in a nutshell. You can use the orb high retests. I don't mind if I see, buying and us testing the highs and taking liquidities out on the retest, especially if there's a POC to take it with a 50%. For me, I like those trades. I like to take them long off of here. If we lose, let's say, you know, we lost in the morning. If we lost the orb low here, and then you come back and you regain it, you should treat that as almost as a value area low reclaim, right? So this means we're accepting the range back inside the sentiment of 30 minutes. So there's a high chance you're going to go from here to here. Just know the 50% of that range, you know, you could use the profit taking. In today's day right here, I mean, the range super tight just because there's no volume, but that would be the concept you can use. You trade, take the 50% off, you keep some runners on the orb high, and you close it there. And same can be said here. If you go, you know, let's say you popped above, you go create the orb high, then you dip below, and then here you take a short. So this would be your, I made that line a little tricky here. This would be your first short, and then your target would be the 50%. If you break that, then you keep some runner for the orb low.
What is the indicator name which this can be used?
This is called orbs. Orbs with shorty targets, I believe. Is that what you guys see? There goes the break above IBH right now.
What's the X for?
I'm sorry?
The little X. What's that telling us?
The X, I believe, is the Momo trend bar that they that sequence tried to put in. Let me see. That's the Momo trend bar indicating long or short on those. If I'm correct, I can ask sequence what he put. I don't use the X's or any of these.
Shorty, I think that's the failed auction.
I don't know what he did.
It's the arrows. There's the triangles. I think that are.
Yeah, the X's are
It
failed
is.
auctions.
Yeah, X's are failed auctions. I don't use them off of this at all. So yeah, I just removed it. So these are, I guess you can have lines here. Let me see. Yeah, these are failed auction lines here. Yep. So they failed here. They had a failed here, and there goes a pop right now. I don't use them, especially not on 3 minutes. I would not use failed auctions too much. Okay, so that's your orbs, right? And I think you can complement this with the sentiment for the day, right? So if the sentiment for the day is bullish, you're playing above the orb high, and you're getting POCs to line up with certain orbs levels, and the shelves are there. They give you a confluence item where you can go and take the trade, and that's what you're looking for. You want the probabilities to be on your side, and you want to think in terms of probabilities, just so that way you eliminate the mind, right? Oh, I took a loss. No, you didn't really take a loss. You executed per plan. It's just the probabilities were not in your favor, and therefore you got stopped out. So it's more important that you get stopped out than let the trade go on and kind of kill you as you're moving. Oh man, I can recover this, recover that. The more you let the percentages slip away on the downside, the harder it is to recover, right? If you lose 90% of the value on a contract, hopefully you guys can calculate how much up do you need to break even, right? It would be quite a bit hike to get that. If you lose 90% of the contract, you can forget. Probabilities wise, you're not going to recover. Like there's no way. Well, I mean, that happens once in a blue moon, and you get lucky, and that's where people forget to set the stop loss because they nailed it once and then they believe in hope and praying, but it really does not. Probabilities wise, you have no chance to recover. Okay. So in terms of setting up the levels, as we talked about, I think 40-30 level that we rejected here, very close to it, is an important level for upside. I would mark my my SVPs for the day. Look at the POCs where we bounced. So we bounced perfectly here today. This was a good entry here. They came right to it and they bounced. So if you're trading this earlier, or in the morning, 4:30, this was a pretty good opportunity to go long. So now if you're able to dip below this POC, it's a session POC, especially if we close below it, this might be a good indication that we're slowing down a little bit. So let's see what happens. I'll update the levels, and we can do a watch list later tonight, just because we want to see how it plays out so we know a better picture on how it's going to work. I'd rather not focus right now, because what they do today could set up a trap on a low volume day. So we'll have the scenarios identified, what they can do. on this level. So I don't mind doing the watch list tonight again and see if we can kind of identify a better picture after we see what they do on the close of at 5 p.m. Okay. Any questions, any suggestions, anything else you guys need help with from charting perspective? Whether it's Thinkorswim or TradingView, whatever that is.
Sorry, I have
Just a
one
question.
question. Go ahead, I'll wait. Oh, I heard an echo. Sorry. So we are mostly charting S&P 500. And for that, we have obviously ES, Futures, SPY, and SPX. So pretty much this show the same picture, but yet they differ somewhat. I see that you're charting as on ES. But what about SPX? I mean, so I see some people charting these three combinations, and I wonder.
You can chart SPX, but you really can't use volume on it, right? So the volume SPX, the trading view, it's aggregated volume from trading, from SPY. SPX you can't buy, right? So
right, yeah, it's just an index, right?
So it's just an index basically. That's a it's a derivative of an index. So you really, I mean, if you want to chart this and see how it respects, I've never done it, right? So this was like a VPOC on it. You would expect a rejection there, and we did. We hopped over it. I don't use it just because I can't trust. I don't know their math behind it and how they aggregate this volume.
Got it.
To me, a lot of these volumes look identical. Like when I look at SPX, I mean, up, down, up, down. It doesn't really tell me much in terms of volume, so I don't use it. SPY, definitely, you can chart SPY with the confluence, right? If you have, like for instance, here, I would expect that we have a rejection at this level on SPY. And I would compare this to the VPOC of ES on 4075. If I go here and I look at this, there's a VPOC there as well sitting, which I would think would match just because of the lag between the contracts. So 475 might be equal to that 404 on SPY. You could probably calculate the ratio and figure out if that's true. So I chart this, and then of course NQ. I look at NQ and I look at the Qs as well. You have NDX, which is relevant to the SPX. And this is really not as liquid, maybe I would say, even as, well, I don't know. I don't trade NDX much, but the options on NDX are horrible. Like they're not really liquid at all. So I don't even chart this guy ever. So for me, it's Qs. I would look at SPY, ES, and then I also do the combo of this plus NQ. Okay, maybe not. Let me see. Come on. So I do this. So this combo I take a look at, right? I try to see what's going on. And here, for instance, the last VPOC is at 16.1. So this was indicate, on any pullback. So there's a high chance they're going to be pushing towards this magnet to get this. And between the two, NQ and ES, that's about 500 points away, or 500 points away, almost even. So I would anticipate that, unless we see some profile shapes here that are dictating otherwise, right? If this one flips or if we close below it to give us a sign that, something's going on. Right now, it's still pointing to the upper side. The value areas are shifting up. Here, they had an overlap. They set up a nice little trap. They came to this POC, which we kind of knew the 3960 was going to be important. And the NQ had the same story. They're kind of going the same way right now, all around the market. They're pushing same levels, bouncing at the levels that they're supposed to bounce. So unless they give a different view here, and NQ to me seems to be stronger than ES at the moment. So we'll see, we need a sign from volume profile to tell us something is off. This was a bullish sign. This was also a bullish sign, bullish. They're pushing. Whenever I see a D volume profile like this, I kind of just give myself a warning that something is off. You shouldn't really be pushing from D shapes and finding new value areas, because you should be content and happy in this range. And somehow either somebody knows information when this happens and they're trying to do it on the low, or it's a trap for potentially a short reversal. And here, I would say this is kind of double distribution, P shape, and we closed above it, right? And I would say this is also P with some volume above, which if you look at it, I'm paying attention. This volume happened above the value area. So it's telling me there's not a lot of volume here, but they're hitting it hard. And then, of course, they're coming back here. They bounce perfectly. So now let's see if this, where they found the previous value here above it, are they going to be able to kind of close it and accept this new value here? So it's super important that they close within the value area here or higher if they want the trend to continue. If they don't, this could be the sign for a reversal, right? And then you have the market news, which the speakers, they can really destroy this because the next week is loaded with that, and they can play so many traps, and your profits should be fairly quick on taking, because they can disappear rather quickly on any comment or bearish or bullish from the Fed. So right now we're still bullish. They're still pointing to the bullish. We have some resistance coming up. If they're able to slice through 40.30, I think 40.75 is 45 points that we can gain rather easily on ES. And that's mainly what I'm watching tonight, see what they close.
Just one small comment. Today is going to be shorter trading period for futures.
Yeah, is it at 1 o'clock?
I believe so, yes.
Yeah, today is 1, yep. So we'll see. I mean, like I said, today's shape, I want to trust it, but I just kind of have to ignore it and see, because this level here from Friday, right, or Thursday, I'm sorry, became really, really, really important here. So let's see what they do here. But this level bounced to a T. If anyone's trading futures, there's not a reason in the world you wouldn't have been long here. This is similar now to the 39.60. So if you guys are thinking about that, this was our level before on 39.60. And what are you noticing about key levels? They're trending higher. This was our pivot before. They bounced twice, they accumulated. Now, they created as a strong support. And now, 39.96, call it 4,000. If you draw, a little box around these POCs here, this is becoming our support. So if we come back to this level here, it's not a bad opportunity to go long again until they give you a reason not to. If they close below 4,000, that means the session volume profile, you close below it, you're not able to find value above 4,000, that would mean a reversal. But that's as long as you trust this day to day, right? Shorter day on the trading, a lot less volume. So it could be a trap, and I don't know how they can play it, right? They could play it multiple ways depending on their position, what they're in, right? I would say we're going to do a trap for short and then continue higher to 4,300 eventually. And then 4,300, I think, magically, we're going to have Fed speakers change their tone. Okay, so that's the prediction for now. And I don't care if I'm wrong or right, but that's something I would keep an eye on.
Sorry, I went short last night on XPX and long this morning on XPX, and I made 1,200.
Well, so I mean, you should be done for the day and enjoying the day off. And
yes, sir, I'm done. I just log off and back to work.
That's it. That's how you do it.
Yeah.
Guys, 400 a day, and that's 2K a week. If you can do 400 a day, that's a great goal to have. Okay. Now the last piece.
Shorty, for which one is the best to trade, like SPX or SPY?
It depends,
based upon
right?
what-
So, if you're a fairly new trader, mainly for this 1K opportunity that we are kind of building to start off, I suggest you start with SPY, Qs, SQQs, something less volatile and something that you can kind of learn the personality of a stock. A lot of people, when they get into trading, and I've seen it, and I also did it before, they will have 30 tickers to watch on a chart. I mean, I just don't get it. Like, how do you keep track of 30 levels on your chart and know where to get in? If you're going to trade, pick 3 stocks, pick SPY. And I mean, Tesla is fairly affordable now. pick SPY, SQQ, and maybe something else in a different, I don't know, sector, right? Whether it's Caterpillar or something, right? That's not in tech, so that way it's always moving together. Have 3, maybe max 4 tickers you're watching to trade, but you can use ES and the others to chart for your confluence points. So not saying don't chart ES and NQs, but to trade, actually execute a trade on, you should not have more if you're new than 3, and I would not put SPX as one of them. Till you get really comfortable, guys. Sometimes I'm an SPX trade less than 5 seconds. And if you're not used to that speed, it doesn't make sense to trade it, right? Your mindset has to be changed to trade SPX.
Correct.
That is what I do, Shorty. On my, I only have SPX, SPY, QQQ, and then Tesla and ES and Nasdaq. Those are the only watch lists I have.
Yeah, and there's no
I
reason to
trade.
complicate it.
Yeah, yeah. I
So
trade
how do you feel
based
since
on.
you've done it? Is it easier for you or harder?
It's easier because I mainly use your volume profile. I trade based on Friday high, low, and POC. If it's extended, I don't trade. I don't even do anything.
Yeah, there you go.
Yeah, I
And
work
how's your
based
trading
on.
been since you accommodated the new rules?
It's been good. Yeah, it makes me more responsible. You know, if I miss it, I don't. I don't even look at anything. I just shut it off.
Yep, and I mean that's the beauty of it. If you guys can get to that stage where you really let the setups come to you, you're not chasing, and you know where you should get in and where you should get out, and what's the level for you to play, it becomes calmer trading. And usually when you're trading, and if you read the trading in the zone, it just feels like it's easy. When you
Yeah.
get in the zone where you're successful, it just feels like it's easy. You can take money from the market at will, as long as you respect the market. As soon as you get cocky and you're like, man, this is too easy and I'm going to increase my size, that's where people unfortunately fuck up.
Yeah. And I also on my journal, I don't use the software. I just use a notebook that I put a date, what I traded on, and then why I did it. And then if I messed up, I write down this is why I messed up. What should I do to correct it? And then
And that's reflecting. That's important. Yeah. That's super important, especially if you're in this Discord and you're a member. We gave you a really good journal. Mike built a really good journal for you guys to reflect it. It has compounding calculators in it. You can really use it. And for the, the one key opportunity, it's important that you use it. I don't know if Sequence and Dumpster are on, but they'll be covering something that we're going to be doing for the challenge, right? In terms of the rules for the challenge, that's what I was going to cover next. These are the rules that I impose. If you have additional rules for the trades, go ahead and add them, right? It doesn't mean this is the minimal, this is the max the rules that you should have, but this is the minimal rules you should follow. 15% max position for each trade. So this is really high. I was debating between 13 and 15. We can leave it at 15, but it should not be more than 15%. 1-2 trades per day. So I say if you miss the first trade, you become really stingy on your second one to make sure it's successful. Usually the rule that I have on my bigger account, if I'm negative for 2 trades, I stop trading. Because usually if I can manage to stop, that doesn't trigger revenge trading and literally start blowing up the account if you do that. When you're trading, you should have a plan. That's the first thing always. I want you to always get in a habit on identifying where you're going to stop if it doesn't work your way. Identify this first, profit last, make it a habit where you continuously do that. Do not trade against the trend, right? So the goal of growing an account is going to be baby steps. As if you see it here, we're starting with 1,000, right? So if we can get to day 30 and pull out $1,400, that's a big success. And we do it again, right? We can increase the size maybe to 2K if you're successful. Then you have the ability to start growing this account rather rapidly, right? If you see the compounding effect, it starts taking place, day 100. You should be around 52K, and you would have a pretty good profit return on that 2,000 that you put in. So that's that. Usually the first 5 minutes, if you guys think about the volume, you think about the IV, it's not advisable, and we're not going to trade the first 5 minutes here unless we are on a call live trading and we see a major volume accumulation happen and imbalance, and it's giving you a beautiful open drive that quickly in the first 5 minutes. Then go ahead and take it, but just know that there has to be a super strong reason to play it. Do not risk more than 2.5 loss to a total account. Does everybody understand that? So if our account is, let's say $1,000, your stop loss at first, you should not be losing more than what we're willing to compound. So 2.5% loss of total account is what you're aiming to keep it less than that. And there's going to be trades that are working against us, but as long as we manage this risk and not impacting the compounding, we should be okay. If we are trading, towards the end of the day, you want to avoid the 0 days expiration. In the morning, when we have a full day ahead, we want to play the 0 days expiration. If you're not comfortable, play 2-3 days out, play the weeklies. Find a strike that's usually in the price range that you can trade, but don't buy it where the delta is 0.001 and the move is going in your direction, but the contract's not moving. So that means avoid playing strikes that are on SPY. If you're at 395 level, don't grab 415 0 DTE and expect to make money. Right? So usually I would not go more than 2-3 strikes on SPY. So if the price is at 395, I'm looking for that 398 and then $3 below, just because the average true range of SPY doesn't really move $8, $15 every day. On typical days, you get a little less than $3 on a move up or down. So you want to look for the strikes in that range as well. Sequence and dumpster, are you guys on?
Yeah.
You guys want to cover the pairing or how do you guys want to do that?
Basically what we're going to do is Sequence is going to put up a form, and if you have a buddy, you're able to add their name into your sheet when you submit. That way we can, when we do the buddy pairings, if you have your preferred friend or somebody you want to review your log, we can do it that way, or else you'll be paired up randomly. So as soon as he posts the link, we're going to basically set up all the security on the Google Drive, and from there we'll start getting the sheets distributed and then link them to everybody.
Okay.
And basically, my goal is to take your parameters here and have it be identifiable within that sheet, so people will have to fill out their logs, and you will be expected to review on a daily basis your partner. So if you're not willing to commit to that, then don't even sign up.
Yep, and that's the fair rule. If you're not willing to put the time to review these transactions between you and the partner, should not take long, guys. Even if you send them your, let's say you can't jump on live and trade it, you can take a screenshot of your balance sheet like this one here, your log, why you took the trade, if it worked or not. It should be reflected in your profit and a P&L. Definitely log the trades. If you don't have a partner, and if one of the partners notices you're not meeting daily, then don't even bother wasting people's time. This takes time and effort, and it takes a community sometimes to, it takes a community to raise a kid. It also takes a lot to make a trader be successful. The goal of this is not only for you to grow the 1,000 account, but it's also to teach your responsibility and thinking, reflecting on a trade. Maybe you won't have that partner for the rest of your life, but if you can create a habit of reflecting why I took this trade, why did it not work, and you document it, then you can go through your log and be like, man, out of these trades, let's say I was successful 24 times when I did this, and I was not successful when I did this. Well, what do you have to focus on? Do you have to focus on the strength or the weakness? Well, you would look at this and look at your losses, see the ratio based on the calculation and the spreadsheet. Are the losses bigger than your gains? If they are, then you have a problem. Then you know how to fix it. So that's the purpose of the exercise. And if you're willing to do it, then join us. If you're not willing to commit to this, if one of the guys or girls says, hey, this partner is not being reliable, we're not getting these reflection points, then we'll just, pair somebody with the other person and make sure that we have something working.
Yeah, and I'm looking to probably start. I don't know. What do you want to say? The end of this month. What is it? The 30th.
Yep, I would say,
So that
you
way I
know,
can get this all tested, because I don't want to distribute 30 plus sheets or whatever and then find a bug with something and have to screw with it. So
yep. So I guess February 1st we start.
yeah, that'll work.
Is
Is it
everybody okay with
options
that?
only or futures as well?
No,
You can trade.
I'm not screwing with futures. It's completely different calculations. Plus, how are
Yeah.
you gonna follow these rules? You know what I mean?
Yeah. It's up to you. If you want to trade, just define the rules for yourself. Make sure you have them. It doesn't mean, you know, if you're doing this 1K that you say take the same trades that I do. There's days that you will be. I'll be posting the setups that I'm seeing for it, and I'll document them, whether they're win or loss. I'll document the profits, the balance, and see how far we can grow this. So the goal for you is to use what you know, use your partner that you have, partner with them, review the mistakes, and fix them as we go.
Yeah, and also, you know, we've brought up the fact as well. You know, if you ain't got $1,000 right now, that's fine. You know, just create a tester account. You know, the purpose of this is to teach and to learn and to you know, foster some accountability and consistency within your practices.
Yep, well said. That's perfect. So if
You
you're in,
definitely need to
we'll
check
have a
very
sign-up
deeply.
sheet, and then you guys can go on that. And the way I would recommend this, and the reason why, if you can do this for 30 days, and you can grow 1,000 to 2,400, it doesn't matter what amount you have here. A lot of people say, man, it's so much easier to trade, you know, $100,000 than it is 1,000. It's not. It's actually a lot more stressful trading 100,000 than it is trading 1,000. If you're able to do this 1,000 and you do it 2 times 30 days and you're successful in this, you're going to have a habit where you can grow any account. At that point, you know, you put in, I don't know, if you put in 25,000, you want to take the PTD out. That's the ability where you can start growing your account. And then once you hit the $100,000 through the process, not finding $100,000 worth of capital and putting into trade, if you're able to build this 1,000 over time and go to 100, your compounding then takes a really, really cool concept of making money. So if you guys think about it here on day 100, let's say you know, you should be somewhere around 20K if you're following the same compounding rules and patience. Once that, you know, 1,000, or if you have $100,000 in capital, it changes. This is where your life becomes fun. Not only fun, but you have a lot of time on your hands. If you're able to make 15K weekly, I'm pretty sure a lot of you guys will have an idea how you could do this. How does your life become better? Not only yours, whether it's your family, whether it's your mom, dad, or whoever that might be, your life can change with this type of weekly money. But you gotta be strict on yourself, and this is the best way for you to reflect. Day one, where'd you go? Let's say I lost money here, 950, that's a big loss. Now you have to climb out of the hole. You come to, let's say, 990. Now you're 1,030. Now you're getting back on track. But it took you a couple of days to get back on track. So you want to avoid these drops from the compounding. The key rule of compounding is not to break it. Once you start growing, I promise there's going to be chances where, you know, you take a small contract. I took Netflix last week from, you know, I think it was 36 cents to $1.40. You're going to have those, you know, trades. And if you see that you're getting in a really good entry, I mean, if you trust, just keep moving your trailing stop up. Let's say you're up 30, you can almost secure the 30, at least secure the 30 on your trailing stop. And that way you made the day. If you see that you can make from 30 to 140, you just made 110. So, you know, your profit will look like this. And that puts you a couple of days ahead. It puts you 3 days ahead. So you become really strict on the trades that you take. Your mind should be growth and strict, not how to jump from 1,100 to 1,500. It should be, how do I preserve this so I can keep compounding, get back on track, or better than a track, but don't get overconfident and increase the position sizing. Same rules, same concept every time, 30 days. And the market's not forgiving at this time. It's probably the worst market to trade. It's been the last week, even if you're a bull, it was tough to trade. Okay, so that's all I had. I think Dumpster, you and Sequence will communicate once you guys are ready, test it out, and then let's take the sign-up sheet, and then once a week, on Sundays in the mornings, we can all get together and review, you know, what worked well, what didn't, and then honestly, just keep yourself responsible and accountable through the other guy or girl. Make sure that you guys are following up, that you're talking, right? And even in chat, a lot of people will message me privately, hey, what about this? I promise there's so many traders in the group here that will give you feedback. If you ask, if you have questions, you're going to get the response and somebody else might benefit too. I don't mind responding and helping you, but make sure you're including other people in the group because it is a community of learning. It's not individuals where you learn this and kind of go away. Okay. Any questions, comments?
Just one comment. I thank you in advance. I mean, I think it's a great idea. It's actually something I believe I would benefit from greatly. So I thank you in advance. Really great idea.
Oh, thank you. We'll see how it goes. It should drive a mindset shift for most of you that are borderline of breaking through. A lot of time your losses came because you didn't have rules. Okay. All right, guys. Well, thank you so much. I'll schedule something for tonight. Let's see how we close here soon. And then we'll set up the levels. I'll also post a link to my trading view so you guys can kind of follow along and see the same levels, right? The goal is not for me to handhold you. The goal is for you to pick it up and then you handhold somebody else for a while and then you help somebody else become a trader. All right, guys. Well, have a good day and stay off the charts. Enjoy with your family.
Thank you, Shorty.
Thank you.
Thank you.
All right. Bye-bye.
Thank you.
Bye.
Guys, let's go 9-9.